today, I think it's just kind of a day where blah, not a lot of conviction either way, not a lot of news today. So, here's where we're at. But last week, obviously, it was extremely volatile. We're not sure if the Fed's going to be able to orchestrate a soft landing. And by their own words, if they do, it's going to be a very narrow path that they're going to be walking down to make that happen. And the problem with today or the near term is that we just don't know yet. And so what they've been clear on is that until they see some consistent data on inflation looking a lot better, they're not going to change their rhetoric. And so right now where the market is, floating around nearly, 24, 25% on the S&P, I think has been predicated on pricing in maybe 1.25% more of a rate hike prior to the year end, and then maybe another 25 basis points afterwards. So if it ends up more hawkish than that, then I think the stock market's got more room to go down. Right? I think investors will be way ahead, as they always are, of what the Fed actually says. So by the time that the Fed actually says they're going to pause, whether it's going to be probably next year at some point in the first quarter, and signaling that by that time the stock market, I would imagine, equity markets, risk assets will be up substantially.